Let's invite our market guest for the morning. Ajay Srivastava, CEO at Dimensions Consulting, joins us now. Good morning, Ajay. Good to have you with us, as always.
Good morning, Lata.
Let me start actually with the big deals that happened yesterday. Kotak at 1200, you think all the good news is priced in, or is it still a long-term buy?
No, I think it's still a long-term buy because at the end of the day, I think with a combined unit, a lot of synergies are going to come into place. A lot of value is going to get created. I think ING Vyasa's performance should improve with Kotak on board, etc. But what was disappointing was the news filtering out and the market kind of taking it up in the afternoon pre-disclosure. I think that's become kind of a norm in the country, and that's the disappointing thing for investors because that doesn't give you a level playing field for the investors to react after the news. So apart from that, I think it's a good long-term buy, and there are three reasons for that. I think one is functionally the equity entity will be much better. Number two is a lot of investor interest will come back into the stock. And the third, of course, is that the global play on financial sector in India continues to be the top bet. So till the QE liquidity comes in, financial services and banks are the number one bet for every single investor. So you are safe in a demand side, you're safe on the entity side. So in a long-term bet, it's definitely a good buy.
Okay. Ajay, hi, good morning. Good to see you in as always.
Good morning, Sonia.
What's the sense you're getting about the market movement now? Do you expect to see a phase of consolidation, or should we brace ourselves for a Santa Claus rally?
Well, I don't, okay, again, that's why I say that to guess the rallies is difficult, but I still believe that if you look at, Sonia, the last 7-10 days, your index is being massaged post 2 o'clock every day for a minor plus gain, etc. So you can already see the pressure and pulls coming in to manage it till 31st December. I think that's what we're going to see till 31st December. We could, in fact, instead of a pre-budget rally, my view is we may even see a correction in the first week of January post the closure of FI books on 31st December. And the reason being that I think the slew of decisions coming out of the government have been kind of quite disappointing to some extent. Number two, they're absolutely contrary to the economic theory being propagated. Let's say, for instance, KVP, Kisan Vikas Patra. The notorious black market instrument is back again. And at what rate? 8.5%. Government borrowing at 8.5% puts a floor as to where the interest rates can fall to. So on one side, you're saying, let's cut the interest rate. Second side, government says, I will borrow at 8.5%. No question asked where the money is going to come from. So these two are not a compatible strategy. So, when you look at the coal allocation yesterday, the guidelines came out. Those are absolutely bizarre guidelines to say, we're going to peg the power prices, then we'll roll back the coal prices, we'll not do revenue maximization in the auction. Some government guy will decide what needs to be done. What is this going on? So it's kind of a disappointment on the decision front, which is going to play out post-January as we enter the budget season, in my view.
Oh, that's ominous, Ajay. And Ben, the traditional pre-budget rally was what I thought would mark the end of this more than year-long rally, but you're calling it off even earlier. What happens to the mid-caps in the meantime? We've seen those stocks really rallying up a little too much. So does that froth get taken off much earlier and more sharply?
See, Radha, I think you're right. The froth always gets taken out. But if you look at the mid-cap stories, by and large, they are not with the strongest bunch of investors. That's a problem with them. Some could be fundamental stories, but most of them are speculative stories and not with very strong hands. So every correction or even a semblance of a correction, you've seen the exit out. And if you see, typically on a typical day when the market is down, these shares are down 15-20%. If the market is up, they're up 15-20%. So it's kind of such a speculative environment that you can't put an investment thesis around them. You can put a speculative thesis around them, but investment thesis, I think, would far to them because volumes are not there. You can't exit, you can't enter unless you pay a steep price both ways. So that's not a place where you want to be and put your money in.
So when you talk about a possibility of a correction, Ajay, what are we staring at? Is it a 5 to 10% correction, something that we have not yet seen this year? Or do you think that we could be staring at, levels much below 8,000 on the Nifty?
As I said, Sonia, two things dictate our correction. One is, will there be another QE coming from somewhere in the world? Because when the last US ended, Japan jumped in, now EU is supposed to jump in another QE. I think really internationally, globally, everybody recognizes that the fundamentals are far away from what the real, the stock prices are, only because somebody is paying you almost free money to take the bets. So if there is no QE or the semblance of QE is diminished, the correction could be far deeper. And you already heard some of the FIs saying, we will buy on corrections. They will defend their position to an extent that they can. But in my view, that if QE doesn't come along, of big nature in the month of January, February, the correction could be steeper purely because what I'm getting disappointed is the government local decisions. If government comes up with some absolutely slew of good decisions, no reason for the market to crack. But last 7-10 days is not giving you a good kind of feeling as to what the government is doing.
So when you say good decisions, what are you really looking for?
Let's take coal. You go to auction coal, just get the highest guy to bid for it, and he supplies to whoever he wants to supply the highest price. If the guy doesn't like the power producer, he can import the coal for all you care what happens today. What is this mechanism which says we will peg some price of power, roll back into the price of coal, and we'll auction the price of coal based upon that bid? What does it mean? Does it mean that somebody is doing a mathematical calculation saying this is derived power? This is same like Delhi airport or Bombay airport. Somebody did the calculation, gave the contracts away, then came back and said, oh, I'm sorry, the contracts were wrong. Let's put a user development piece. Let's give them real estate. This is not. You have an auction, have a clean auction. Look at 2G or 3G, for instance. Nobody's asking a subsidy. There's no rollback in prices. There's no increase to customers. And government got the best money. So why the shadow boxing with coal?
Okay, well, I guess it's only to clean out a mess that is now 20-year-old. But just to move on, Ajay, anything that you see as emerging from the earnings season as standout performers in the mid-cap space? Any new leading lights?
See, I think the only one which stands out is the cement companies to an extent, and the tire companies, because these two have been pretty well in the results side. You may not call them, JK Lakshmi Cement, you may not call them mid-cap, or Ashri Cement, you may not call them mid-cap, or Dalmia Bharat, you may not call mid-cap. But those results have been very, very satisfactory. Same is the tire companies. So between the cement and tire companies, I think we saw a good slew of results, and they seem to be on a good wicket with costs going down. They're managing the margins pretty well. Volumes could be flat, but these two sectors, I think, have shown us that the results can be good even in a depressed demand scenario.
Okay, government or no government, are you smelling a recovery anyway? Because cyclically things are picking up. I mean, are they picking up for you at all? One of our colleagues, Sohini, that just recently visited the Tata Motors plant, and she brought back a feeling that the mood there is that MCV sales have definitely picked up. Commercial vehicle sales have picked up. Are you getting a sense of an economy on the turn?
See, let me put it this way, Lata. The October has been disastrous.
Yes.
You'll see the results very soon. You've already seen the results. The Diwali has been pretty bad. Now, November, December, when it plays catch up. Tata Motors may say at the end of the day, this is what happens almost the time. That listen, we're producing more because March is coming, etc. You will load on the inventories. You saw that happening in Mahindra's at last year, where they produced lots of Scorpios and XUVs, could not sell them, therefore the volumes dropped. I'm not sure. Yeah, okay, the feeling is that recovery is round the corner. Is it on the ground? I have a great doubts on that part. And I say this very, with great amount of evidence to say that the demand side is not working still in the economy. And that's where the maximum trouble is. And it's not going to be easy to get the demand up in the system and people start buying it. If you look at what's happening in interest rate we just discussed, if you're giving yields of 10% and thereabout for 7 to 10 years, where is the incentive? You want to bring up the savings rate. Just when the aggregate demand has fallen, we want to bring up the saving rate from 30 to 36%. That's contrary to economic policy. This country cannot afford fiscal deficit being controlled. We want to spend money right now, but we are contracting our economy. So how will demand go up? If you contract the economy, how does demand go up?
Okay, someone's woken up on the wrong side of their bed. It's Friday, Ajay. You can cheer up a little bit. I know things are a little bleak. I understand.
It's Friday. It's Friday.
Yeah.
Okay.
Thank God it's Friday.
Thank God it's Friday. Okay, since you are in the mood to tell us, what all is going wrong, tell us about the pockets or the stocks that we should now stay away from. If you have it, book profits. If you don't have it, stay away.
I think very simply, real estate companies, you got to book your profits or stay away from them, in my view. That's one segment which is going to give subpar performance. Certainly the North Indian companies, you need to stay away. Auto ancillaries have run the course in terms of premium to the market. You need to book your profits there. On the other hand, you said I'm in a bad mood. No, I'm in a good mood to say, do not desert pharma. Do not desert IT. If you got it there, hold it. If you have money, invest in it. These are two sectors which will stand you good for next 3 to 5 years. So don't desert it. But these are the sector, auto ancillaries and the real estate. I would still believe that time has come to book your profit. They have run up quite a bit, or at least not corrected enough, and put the money to work somewhere else.
How about the most important sector in the world today? Logistics. We are behaving sometimes as if only that sector matters.
Well, it's good sector. I think you'll see a good demand performance. But again, I keep saying that there is enough in the market on the front end than to go on the back end. If you look at, let's say the biggest company in the logistics, the Gateway District Parks, it's taken a long time for the share to perform. These are slow performers. They are steady performers, slow performers. So if you want to put the money there, Lata, I wouldn't put my money to work there. I want faster money and quicker money, right? All of us would do, right?
Yep.
Okay, you said do not desert pharma. Have you deserted Ranbaxy, or you haven't deserted that one just yet?
No, I've got the position there and through Sun Pharma, and I'll continue that position. I can tell you very simply, I'll not desert the position for the next 5 years. Okay. And I'm not going to sell. If there's a steep correction, I'm a buyer at every stage. So I'm not a seller in pharma for even 1 minute.
We've gone on for a goodish bit, but I must ask for your views on Cipla as well. It's seen a fairly decent rally in the past 2 or 3 days.
Mediocre performer. I would not put my money. It's a kind of flatter to deceive most of the time. It may change its trajectory once and again because some calls have come in. But that is one stock, Lata, if you trace the 5-year history, is actually given the lowest return in the pharma industry, if I'm not wrong. Yeah. So I carry a lot of baggage. Unfortunately, we are older people, so we carry a lot of baggage with us. So we don't want to be with people like NTPC, for instance. Those are dogs. You don't want to be with them.
I can't believe you have put Cipla and NTPC in the same. You've taken those names in the same breath. But be that as it may, give us a couple of stocks one can really put their money into now, Ajay. I mean, Lata was asking you about some of the mid caps, etc. But if you had to give us 2 or 3 stocks that are still good buys, irrespective of which way the market heads, what would your comment be?
See, I think in IT space, you should buy, even at this prices, 2600 Tech Mahindra, and keep that stock. I think it's a great stock. It's willing to go up further. You will get a 20% plus return in the next 3 to 5 years. So in IT, you must buy Tech Mahindra. Second choice would be buy Infosys and keep it. Don't go down. Third choice is Oracle. Between these 3 stocks, build your portfolio. I think it will give you a very healthy return. In the pharma side, you space it out, I think, in my view, to say that they go with Lupin, go with Sun Pharma, go with things like Suven Life Sciences, because these are companies which can be sold. I'm not very clear about Shasun, for instance, but Suven, yes, I'll be clear. Lupin, I'll be clear. And, Sun, I'll be clear. Because a combined entity, in my view, should take the market cap up almost double in the next 3 years. So you're talking of serious increases. So these 2 spaces, I think I've given you. As I said, I would still stick to cement because that's one sector which will give me superior return. I will stick to tire companies for some time because their cost has gone down. So L&T, that's the one bet I have that, I think L&T is another Infosys. We're going to see double in price because sooner or later the management will go, and Lata, we will double this price.
Oh, really? Okay, we'll hold you to that word very soon. Thank you very much, Ajay,
all right,
for joining us.
Thank you very much.
Thank you, Ajay.